Hey, what is up, everyone? Welcome back to Market Psychology 101, where we practice conditioning our minds to find value where there's fear and to be cautious where there's greed. If you find anything I say to be helpful, please consider liking and subscribing. So, the CPI data came out this week, and Jerome Powell, many people felt that he sounded dovish, as did I. I will say he sounded dovish to me, at least in a disingenuous way. And I'm wondering if the Fed is somehow encouraging markets to rip up before eventually in 2024 that they go back down. He did mention how a recession is probable. He sounded almost more sure of a recession in 2024 and said that there is still a high probability of that. So, just something to keep in mind. We're going to take a look at stocks and cryptos. Before we get to the charts, let's just take a look at our fear and greed indexes. Sorry about all the ads. So, this is for crypto here. Crypto, we're still in the green greed zone. I'm actually surprised we're not higher at this point. I keep waiting for extreme greed, but maybe that comes when Bitcoin gets to the 48,000-50,000 level. If we take a look at fear and greed over time, so you can see we're at levels not seen since November 21. That's when we were ending the overall mega bull run. I am still checking this 2019 area. I feel like this so far is very similar to 2019. I'll get more into that later. This is our Bitcoin rainbow chart. And as you can see, we're still in the accumulate phase. And something I've noted before, that every halving we seem to go up one phase. So here we're in the basically a fire sale. The first halving, the second halving, we were in the buy zone. The last halving, we were in the accumulate zone. So does that mean that the next halving will be in the still cheap zone, somewhere between 51,000 and 66,000? Not sure that will happen, but it's crypto. You never know. The US yield curve inversion, the 10-year 2-year, the 10-year 1-year spreads, we're still inverted. We have not uninverted yet. When the Fed starts cutting rates and when the yield curve becomes uninverted, that's when I'm going to say start the clocks or start the timers, because after that, I believe it's only a matter of time until we enter into a recession. As you can see, after the other uninversions, here we uninverted with a recession. That was in the 70s and 80s. The 90s, there's a little bit of lag there. That was a minor recession before Bill Clinton became president for 8 years. Dot-com bubble crash. When we uninverted, the recession came later. Same thing with the 2008 Great Financial Crisis. Same thing, just very briefly, we had a brief dip and then recession with the COVID crash. So yeah, that dipped and ripped back up pretty quickly. Let's take a look at smart money and dumb money. We'll start with dumb money, and dumb money is still trending upwards. And so, what does this mean? It means the rally currently right now is getting a lot of retail investment. I am staying out personally because, as we can look here in a second, smart money is still trending downwards. I think there is going to be some times, better times to buy soon. Q4, Christmas season, more often than not, it's a time where everything's going up, people are spending. And so that is a time I like to just pay off anything I'm financing, pay for Christmas presents. The time to buy for me is when smart money is dipped and we have an opportunity to go back up, because as we go back up after the dip, that's when we get near the market lows, at least for that area of time. Overall, fear and greed, this is just for the markets. We're still in greed. Again, I'm expecting us to hit the extreme greed soon. We'll talk about that. As you can see, the S&P is just ripping up. We have made yearly all-time highs, and we're getting very close to the overall all-time high with the markets. So let's zoom out here. Let's zoom out here. We're getting close. We have an all-time high here around 4830. Currently, we're at 4700. Are we going to create new all-time highs? I have a feeling we're going to. That we're going to get a little bit above sometime in January. Maybe it's around the time with the Bitcoin ETFs that maybe we will start to see some corrections. So just with the volume support resistance zones, this is iron levels between 4740 and 4814. And guys, just a quick reminder, my channel is for people who are more investor minded. We're trying to take more of a macroscopic look. Something I'd like all of you to do if you are new to investing, trading, getting into cryptos, practice meditating, practice taking your deep breaths. It can be very hard to sit on the sideline when you see all this excitement coming in and you're hearing more and more people talk about cryptos, and some random person that you know gets rich, makes $10,000 off some meme coin, something that has zero utility. That can happen. That can happen. Shoot it straight with y'all. That is a lot. That's like gambling, playing the lottery. So the odds of that happening, even with trying to research, is very hard to do. You can look at some of the coins that are on the Solana exchange, things that are new, hot, check the Reddit boards, things like that. But a lot of time, more often than not, people will put in money and they'll get rugged. And as I've been saying more and more, time in the markets is more important than timing the markets. So, here, let's just finish up with the S&P. Maybe we go higher. Let's take a look over at Bitcoin. As you can see in the volume resistance, hey, how they got all the words in there. It's hard to make that disappear, but this is still showing that maybe we get as high as 52.7 or 48,000. I'm still eyeing that level. Okay. Let's take this off because I want to bring up a different indicator. I like this UT bot alerts. It gives you buy and sell signals. I like to have this on the weekly because overall it has a pretty good track record. If you want to go to monthly, even better. Let's go back to the stock market for a second. The VIX looks like it's bottoming here. We're seeing a slightly higher trend in the relative strength index. So maybe the VIX is going to start reversing. Again, if the VIX starts ripping anything above 35 into the 40s, 50s, 60s, it's usually a time when there's market lows and time to buy. One interesting chart, I like this one a lot. It's the VIX divided by the VVIX. And this one, man, look at that. We just shot down a lot. And so because we're making new highs, this is kind of like another way of looking at, what would I say? Fear and greed index. As we get lower, we're getting more greedy. As we're getting higher, there's more fear. And so times up here when it says sell, it's actually when you want to start looking in the stocks or cryptos to buy. Anyways, we're still ripping lower here, and that's going to mean the markets are going higher. Last time we were down this low was later 2017. Before that, later 2006. And we know what that led to, the great financial crisis, 2017. We didn't have the COVID crash till March there of 2020. There was some uncertainty in this time. So let's take a look at late 2017 onward. Late 2017. Yeah, as you can see here, we were dipping. That would have been a good time to buy. Even with the COVID crash, we just sort of matched those lows. So, is this showing us that some good buying opportunities are coming? Possibly with how low we're getting. Again, let's take a look at this. With how low we're getting, look how far we wicked down. That maybe some good opportunities to buy are coming when we wick back up. We'll see. Something of note with the unemployment rate is that we got a sell signal here. So it's buying, selling, buying, selling. Are we going to continue to sell, or is it going to be a false read like we had back here? The trend is going up. The relative strength index, everything's going up. I believe, I think, I'm willing to bet that we're just going to keep curling up here. And as we curl up, those tend to be recession times. And so just something to keep an eye on. It's not imminent, in my opinion. However, during 2024, I do think that could be coming. Dow, let's put the weekly back on. Very similar to the S&P. As you can see, the Dow did wick to all-time highs. So let's get into crypto here. Sorry, my cat feeder's going off in the background. As you can see here with crypto, I put these zones. This is just for me, guys. Please don't copy verbatim what I do. But as we escaped this pit of death, as we fell down into these lows after making highs and getting below any sort of support, when we escape out of the pit of death, that to me confirms that crypto is indeed setting up to get ready to run sometime. Now, I do believe that we will come back down. Nothing's guaranteed. Nothing that I say is financial advice. However, I do think we're going to rip up a little bit first, like we did in 2019. And as we get down, if we're between the 25, 35 level, as you can see, we have some support there. And we would have resistance there, all the way back here to here. And we have support here as well. I feel like if we are to come back down, that this will be an area we're going to spend a lot of time in. And if so, I will be dollar cost averaging, accumulating into cryptocurrencies. Anything below here, if the recession gets really bad, I'm going to be buying a lot. Like a lot more than I can comfortably, more than I would feel comfortable with. Because I do believe in crypto. I know the news will be very negative on crypto if we get down in these levels. However, I do believe it would come back up. The reason I make this comparison of escaping the pit of death, it's similar to back here as we came down and started to make some structure here and we fell. You could say the pit of death was down here, and any time that we went back into that pit was a good time to buy, and we only got that time. But in 2019, when we came up to these levels of 14,000, as it started to come back down, those were good areas to accumulate. After we made that top, look at this, June of 2019, you can see it at the bottom, June of 2019 to November 2020. I would say you had about a year to still accumulate after this local high. Now, I don't think it's a good time to buy it right when we're here. Let's see what the markets do first. Is it going to come back down and just continue making lower lows, or is it going to come back up, test resistance, and then shoot through? As you can see here, it came back up, tested resistance, shot through. This is not the time to buy right here. This is the time to buy, okay? So, again, we escaped this pit of death. It's not as bad as down here. I am comparing this area more to this area in here. I would say this area right here matches more what we had back here. Overall in crypto, we are having, at least with Bitcoin and the larger cryptos, we're having less dramatic moves as time goes on. And I do believe that's reflected in the Bitcoin rainbow chart. As you can see, you can just look at the prices, how insane the numbers went up. And here on the logarithmic scale, it's starting to level off. So we are going to see that in the charts. Here, I think this is like the most recent FTX time. And everything here is a lot like everything in here. So I'm not buying right now. I think everything's gone too parabolic and that it could go parabolic even more and that better times are coming soon. As you can see, we've went over the overbought area of the RSI and we've gone up. That means that I believe we'll probably test or at least hit the oversold area of the RSI again and that it may even go up again. What I look for is the price stabilizing? As we keep hitting the overbought or the oversold, is the price stopping? When it's oversold, as it keeps tapping, here we just go sideways. Oversold, oversold, it's sideways. That tells me price is stabilizing. If we went from oversold here, look, oversold here to here, we went higher, higher, low. Oversold here to here, we stayed. If this here were to go lower, I would be bearish. But because it was stabilizing, I knew, or I was pretty sure, that we had higher prices coming. Let's take a look at Total 3. Total 3 continues to rip up. Again, I believe, my theory is that we're in a 2019 type situation. And something to consider, guys, just with Total 3 in general. When we started ripping up in Bitcoin, when we started, let me take this off for a second. When we started ripping up to that final level in October of 2020, look at Total 3. Let's find October 2020. Okay. We had some rips before, just like in 2019 here. And then, of course, we all know what this dip is. That's going to be the COVID sell-off. But Total 3 just ripped up. Okay. We haven't quite done that yet. We've just been accumulating here, and we're getting this move. But it does not mean that we can't come back down. Here is a little more spiky and volatile. But if we take a look at Bitcoin dominance even, let's zoom out. We're still climbing higher. I still feel that Bitcoin dominance has to peak before it retraces into the alts. And again, when we started to rip into the all-time highs, look what Bitcoin dominance was doing. It was just staying up in that level before we sold off. And so I am looking, we're still going up. We're still back here. Look at this. September of 2018. And then we went sideways for a bit. 2019, where we had that high. We had the high in 2019. I want to say, yeah, it was around July here when it went up here. After we made that high and we just chopped around, we were accumulating. And even in here, when things started to go up, Bitcoin dominance was still going sideways. It wasn't until, look at this, when we go down, March of 21, what happened with Bitcoin in March of 21. That was the end of the real bull run when we went down. So I am looking for, when Bitcoin dominance to go up, I'm looking for, because we're in less volatile times than in this bull run, I'm looking for some chop like this to go even longer, to get up here, to chop around sideways a bit. And then when it tanks, that's when we have the end of our bull run. That's what I'm looking for personally. Something else I want to show you really quick. Let's take a look at the, where is it? The pi cycle. We're getting close to that white line. 2019, we hit and even went above that white line. This would be like extreme highs. Might we hit something like 57,000? I am looking for those levels as an extreme. Everyone's calling for 48 to 50, 48 to 50,000. Are we going to rip above that? And if we do, I would take a look at something like 57 to 62,000. Because look, we wicked above. The body of the candle staying down here, so maybe the body will stay down here, but we'll wick to something crazy like 62 before then tanking. Here's when the halving happens. I am guessing that as we get close to the halving, we're going to come down a little bit and we're going to be in here. And by the end of November 2025, that's just matching the 4-year cycle. Put that red line there because that's when I believe, even with the recession taking up most of 2024, even 2025, that Q1, maybe near the end to the end of 2025, that's when we're going to get the really crazy mega bull run. We'll see. That's my theory. Guys, just as new investors, one thing that it's easy to get sucked into a trap of is trying to predict things based off patterns. I personally don't prescribe that. And it's a fun thing to do, to look at with crypto, because it's made those patterns before. As you can see in the Bitcoin rainbow chart, that's why people are so obsessed with it. What you really need to do first is just take the market as it comes to you so you can react to things. So, make your own plan. Write down 5 to 10 stocks or just 3 to 5 cryptos. Do some research. Make your own plan. Spend more time in the market than trying to time the market, and look for monthly buy signals. Look for monthly buy signals. Look, if you bought Bitcoin on every monthly buy signal, 1 out of those 4 was not good. However, you could have used other indicators to know that we were done with the bull run back here. Just like when we looked at Bitcoin dominance, that you could have just sold here and ignored all the noise, waited for the worst news to come out, FTX bought in, boom. You could have even waited a little bit longer to confirm. So that's my personal opinion. Let's take a look at the S&P. If we would have just done monthly buy signals, that's pretty good right there. You could dollar cost average in on monthly buy signals. And look, overall, you'd be doing pretty good. Now let's go back to a time where we really crashed. Let's not go back that far. Most recently, the dot-com bubble, monthly buy signal. After the crash, monthly buy signal. If you would have just followed monthly buy signals, look, before the dot-com crash in 2000, you would have only had 3 monthly buy signals between then and after the crash. And if you would have just bought in at those 3 times, all this stuff wouldn't have mattered. Look at where you'd be right now, just way higher. You'd made so many profits. So just, if you want to keep it simple, double check the areas of the oversold RSI when we get down here, monthly buy signals. It's a way to keep it easy for yourself. But anyways, just something to play with. Again, I encourage people to spend more time in the market, not try to time the market, to react, not try to get caught up in predictions. Even as you hear me talking about, and guys, this is just theories. Who the heck knows what's going to happen? These are just theories, so please do your own research. Anyways, let's close it out there for today. And remember, I'm not a financial advisor. I am not a trader. Everything I say here is just my opinion. Nothing's financial advice. And I do have a lot of knowledge and experience in the field of psychology. And I have used that to my advantage in stocks and cryptos. My stocks are up over 50% this year. So I'm doing pretty well because I've bought when there's been fear. And I've stayed on the sidelines when there's been greed. So, this channel, we look at macroeconomic conditions, and we're looking at just times to buy and hold, to decrease capital gains taxes overall, to try to find those good opportunities, to be patient, and to make investing not feel like gambling, and to take the stress and the emotion out of it. because if you get emotional with investing, emotional with trading, it's a good way to lose your money. Anyways, that's all I got for today. Have a great weekend, everyone.